So how does elections typically affect the housing market and also the real estate market for both investors and non-investors? So I spent countless of hours researching articles, looking at data points. I've also spent a lot of time shadowing and listening to investors who've been around the game for 20, 30, 40 years, along with the 7 to 8 years that I have in my own experience being a practicing real estate investing and real estate investing entrepreneur. So I'm gonna compile all that for you guys and summarize it for you guys literally in the next 10 to 15 minutes. Hey, what's going on, guys? This is Daniel, one half of the Kwak brothers. And in this video, we're gonna be talking about how elections affect housing markets and real estate markets for both investors and also non-investors. Now, before we go ahead and continue, guys, don't forget to like this video and also subscribe to our channel so that you can get notifications when we release new content on real estate, on stuff that's happening with the election, and overall the financial markets. All right, guys, let's go ahead and continue. I'm gonna be sharing with you guys three main things in terms of how elections correlate and affect real estate markets and also housing markets. So let's go ahead and start with number one. So number one is that typically presidential elections affect the single-family housing market more often than commercial real estate. With commercial real estate, however, and we will touch on the housing market here in a moment, with commercial real estate, that's actually more affected by your state, local, county, and city elections as opposed to the presidential federal election. Now, let's think about why that is. Well, that's because typically, if you look at the way commercial real estate is valued, you gotta go to the net operating income. Now, the net operating income, aka the NOI, is the money that you make after all expenses. Now, if we think about what happens at the state, local, county, and city level, well, those elected representatives and officials decide what the tax rates are going to be for these pieces of real estate assets. Therefore, if the taxes get higher, well, that in turn decreases our net operating income because our taxes are part of our expenses, right? We have to pay taxes every single year. And well, the higher the taxes, the lower the net operating income gets, which in turn lowers our cash flow. It also lowers the returns that we give to our investors. And it changes a lot of things that we have to do. And the lower the net operating income, the lower the value of that real estate property is going to be. Because, well, at the end of the day, with commercial real estate such as multifamily, retail, industrial warehouses, office space, what are we paying for? When we purchase these type of assets, we're paying for a particular income stream. Therefore, the elections at the state level, at the local level, at the county level especially, affect commercial real estate way more. Let's also talk about what else affects commercial real estate when it comes to the state, local, and county level is stuff like landlord-tenant laws, rent control, right? Any regulations and policies with rent, and also the eviction process. When we look at all three things that directly affect the way that we as landlords run our business, these are very important things, especially when it comes to, even just landlord-tenant laws, right? Which is why a lot of people don't want to invest in the states such as California, Illinois, New York, just because they're very, very tenant friendly. And a lot of times landlords lose tens of thousands of dollars that they have to pay out of pocket just because of a troubled tenant and stuff that necessarily might not even be their fault, right? So when it comes to commercial real estate, the state, the local, and the county and the city elections affect commercial a lot more than the housing market. And speaking of the housing market, those typically get affected on a federal basis more on the presidential election. And well, rightfully so, because even if we look back 3 years, right, in 2017, the Trump administration released what's known as the Tax Cuts and the Jobs Act of 2017. And one of the key takeaways of that administration's push was the fact that there was an inability to deduct any more than $10,000 for luxury pieces of real estate. And that hurt a lot of individuals who owned a lot of these big mansions, a lot of the luxury homes, and well, especially in states that have very high tax rates if you live in a big house such as California, Illinois, New York, right? It hurt them a lot, right? So we saw how certain individuals who got elected and their policies and their initiatives directly changed the way the housing market operated. So me living in Illinois, I saw firsthand a lot of individuals who lived in these, $300,000, $400,000, $500,000, $600,000 homes deciding to sell their homes and move to a place like Tennessee. The Carolinas were really popular, and of course, Texas, which seems to be the state that everyone is trying to move into right now. And I saw firsthand a lot of individuals moving out, and the housing market, especially on the luxury end, kind of being hurt. And well, on the other end of the spectrum, houses under $300,000 were booming around my area. So having said that, housing markets overall are more affected by presidential elections and vice versa with commercial real estate, which are more in turn affected by the state, local, county, and the city level in terms of their elections. Now, speaking of which, guys, housing markets do tend to do better with an overall better economy, right? Historically, we see that there is a bit of a correlation, which leads us to point number 2, which typically if a president-elect prioritizes the economy more than any other policy, any other issues, the housing market typically tends to do better in response to that individual being elected. So let's go ahead and kind of break it down, right? And let me first start this breakdown by me sharing with you guys my personal opinion that the reality is that presidents don't typically affect the overall economy as much as people think that they do, right? We see these numbers like unemployment, job growth, and we see GDP. And well, although a president can write policies that can affect those things, well, it's not necessarily the case all the time. As we know, markets go in what's known as market cycles. And every 8 to 12 years, there tends to be a bit of a downturn or a recession or a depression, right? Think about we had one 12 years ago in 2008. And before that, we had 8 years ago in the dot-com. And before that, 10 years ago. And then we had the energy crisis in the 70s and 80s. And we just keep going back and back and back. And these things happen every 8 to 12 years. No matter who's president, whether it's Republican, whether it's Democrat, whether tall, small, rich, poor, does not matter, right? So let's go ahead and break this down, right? If we break it down in terms of how elections affect the housing market, right? The reality is presidents, again, don't affect the economy as much. However, on the other hand of the spectrum, they can write policies, as I mentioned earlier, that do affect it. So let's go back in terms of an example to 2017 with the Tax Cuts and Jobs Act initiated by the Trump administration. That initiative brought a lot of great tax cuts for businesses, both big and small. And then in turn, well, guess what happened? We saw a lot of growth in the equities market. That in turn produced a lot more job growth. And that overall turned consumer confidence at pretty much all-time highs to where it reflected not only with record lows in unemployment, but we also saw record highs when it comes to the Dow. And also, not only that, but the real estate market right now is also at near all-time record highs. Mortgage rates are at record lows, right? We saw a lot of great things happening. And that in turn, because of the overall better economy, we saw great things happening in the housing market. Now, am I saying that that is going to happen every single time, that it's like a chain reaction, that if this happens, that automatically happens, and that happens? No, that's not what I'm saying, right? It'd be very naive and foolish to think that is the case because, well, if that was the case, then it would happen every 4 years with a new president. However, I will hand it to Mr. Donald Trump in saying that he did two things very, very well. Number one, he initiated a lot of tax cuts during the last 3-4 years of his presidency, which I again explained to you guys with how tax cuts affect corporations, and then in turn it increases more jobs, which then in turn increases consumer confidence, which then in turn increases different numbers such as unemployment. I won't go down that road again, right? But on the other hand of the spectrum, the second thing he did really well was he privatized a lot of former government initiatives. One of those being the idea of the space programs, right? He initiated the Space Force, last December, and he also initiated a lot of grants towards private companies such as SpaceX, Blue Origin, Lockheed Martin. We're spearheading, putting man on the Mars or the moon, or just increasing our space technology as a whole. And obviously, because of that industry, because of companies like SpaceX and Blue Origin, they were able to create a lot more opportunities, a lot more jobs, and help with unemployment. Now, guys, am I saying that they're solely responsible for the unemployment numbers we saw pre-COVID? No, obviously not. But it's that plus a lot more other things that had to do in terms of privatizing a lot of initiatives that used to be government. So that was phenomenal in helping not only bringing domestic jobs back because we had those initiatives based on the private sector, but also it also helps with the housing market because, well, the bigger these companies get, well, what does it do? Well, it allows them to grow offices and headquarters in different areas of the country. For example, places like Florida, Texas, where a lot of people have benefited off of these new opportunities and these big companies who are not paying taxes in those areas. Let's move on to number 3, which is that housing prices actually tend to decrease during election time, which is pretty obvious considering that during times of financial uncertainty, which is caused by a lot of people wondering, well, who's going to get elected, right? If the person in office currently is staying there, well, we know typically where they tend to trend. But if the new individual challenging the existing president has different policies that will affect the housing market in different ways, that raises a lot of questions. So typically during those times, prices do tend to go down because, well, the buyer pool isn't as big. Now, having said that, however, during non-presidential years, which are years like 2014, 2018, when there's no election obviously close in terms of the presidential election, 2010, right? There is a 9.8% decrease between the months from October leading into November. Now, guys, I will say typically every single year, there tends to be a decrease anyways, right? During October and September, those are the big months where people want to sell their houses. The transaction obviously goes up, right? Along with the spring. And well, November and December, they're the holiday seasons. Nobody wants to do anything, right? No one really wants to sell their house. They all want to be with their families. You don't see a lot of people moving during November and December. Not to mention, especially even in my areas, right? The northern states, it gets cold, man, right? In Chicago, it gets like -20, -30 degrees. And I don't know about you, but I don't want to move when it's -20 and -30 degrees. So there is a 9.8% decrease in November compared to October in non-presidential years. However, when we move to presidential election years, that same number goes from 9.8% decrease to a 15% decrease. So because of the financial uncertainty, that number typically does decrease by more than 50% from October leading into November. So having said that, overall, presidential election years, typically housing prices do tend to decrease. Now, obviously, we don't know what's going to happen. In my opinion, I think we're going to kind of see the same thing in terms of uncertainty. Now, I do believe the housing market is going to get hotter and hotter and hotter until something does happen, like a housing crash, which I believe will happen next year in 2021. But until then, guys, I hope you enjoyed this video. Don't forget to subscribe, like this video as well, share it with your friends. And until then, I'll see you guys in the next one.